Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, the cost of healthcare is rising at an alarming rate, and a sudden medical emergency or healthcare issue can drain out a major chunk of one's savings on medical expenses if the family does not have adequate medical coverage. Now, healthcare insurance is an important requirement in this day and age, but almost all of us are faced with one question: what would be the right healthcare plan for the family? Now, among a host of other questions that we have on healthcare, today we are going to delve deeper into the specifics of healthcare insurance, and we have Yashish Dhaya with us, co-founder of Policy Bazaar. Yashish, I have statistics in front of me. WHO says that 75% of the population in India is outside the healthcare coverage realm, and according to the WHO study, Indian patients pay about 50% of the healthcare expenses from their own pocket. I think this may be even higher. Now, what's stopping us as Indians from buying healthcare insurance?
So, just to put these numbers in context, the total amount of spend on healthcare in India by individuals, by government, by insurance companies, all put together is 7 lakh crores, of which health insurance covers only 20,000 crores. So, about 3%. The remaining 97% is not paid for by health insurance. So either somebody is a government employee or a CGHS, ECHS, or the people are paying by their own pocket. A bulk of people are paying from their own pocket because, as we know, everybody who falls sick can't be a government employee, and only 3% is coming from health insurance. So a bulk of it is being paid by individuals' pocket. This is in very stark contrast to, let us say, a Europe or a US, where in Europe, the state covers pretty much all the basic healthcare. All the healthcare, and in the US, where individuals pay only 11% of the healthcare. So total healthcare spend, 11% is paid for by individuals, and US is considered one of the worst systems in the world from a healthcare perspective. So we are obviously in a very strange situation, and healthcare, it does not need to be elaborated how high healthcare inflation is. All of us who are slightly about 40 years, 50 years, etc., know that what healthcare expense was 10 years ago and what it is today for the same disease, for the same problem. Of course, hospitals have improved, care has improved, but things are a lot more expensive. And they can have a very, very severe dent on individuals, especially older individuals. Many individuals will end up spending a bulk of their savings in the last 30, 40 days of their life, primarily as health cost. Somebody was just mentioning to me about half an hour ago that one particular hospital is giving bills of 50,000 rupees plus a day. How long will a person's savings last? And everybody does fall, many people fall sick before. So I think it's critical to get health cover. I don't think it's an option any longer.
So given the state of affairs and the importance of health insurance, walk us through how one should actually choose a good health insurance cover, and what would the costs be?
I think one needs to understand what amount they want to be covered for, whether it's 3 lakh rupees, 5 lakh rupees, and that depends upon, from a health insurance perspective I'm speaking right now, that depends very much on what kind of a hospital do you want to stay in. So if you take a 2 lakh rupee cover, you cannot stay alone in a room in a Max or a Fortis. That will not happen. And if that happens, you'll be paying a bulk of the money from your own pocket. So you have to decide what kind of health cover do you want. So it's not that you want to be covered up to 5 lakhs or up to 2 lakhs. It is just what kind of a hospital do you want to go to and what kind of coverage do you want in that hospital. Because all of these have got room rent caps at various levels. And it's only about 5 lakhs to 7 lakhs that the room rent caps go away. So if you want,
and room rent caps also determine the cost of the procedure that you're going to.
Absolutely.
Right. So it will go up by 15-20% depending on the cost of the room.
Yes. And health cost by itself for most people will not be very significant. It may not be 5 lakh rupees, etc., because normal diseases don't cost so much. But the room rent capping will ensure that only if you have a 5 to 7 lakh rupee cover are you going to get the kind of room. Now you may say that it's okay, I will pay for the difference in the room, but I will take a 2 lakh cover instead because I think 2 lakh will cover me sufficiently. No, that will not be the case, because the entire difference is not just on the room rent, it is also on the consultation, it is also on the procedure. So even if you have a surgery, there is different rates basis the room you're staying at. And if you have a 2 lakh rupee cover, you will be paid at the rate of the lower room rent, not at the higher. So if the same surgery costs 10,000 rupees and 25,000 rupees, 15,000 rupees you'll be paying on your own. So it makes sense, if you can afford that, to take a cover of about 5 to 7 lakh rupees is my take. Now over and above this, and we can talk more about these particular products, one must have a critical illness cover, because a critical illness is those illnesses which can cause big jumps in the cost. So cancer, heart.
So that can be a rider. That can be in addition to
No, they don't need to be a rider. You need to take a standalone policy. I think it's an important enough policy to take a standalone policy for, which will last for a long period of time. I think the third part is accidental cover, because accidents happen, and accidents can also have very large costs. And I think there are ways in which you can structure your plan, which we can also talk about, which are like top-up plans. So see, when claims happen, the incidence of claims is very high at the smaller amounts. So typically a claim is about 30 to 50,000 rupees. If you look at any health insurance company, 80-90% of claims will be 30 to 50,000 rupees. Maybe only 5% of claims will ever go beyond 1 lakh rupees. So if you are taking a cover from 1 lakh rupee onwards, the possibility of those claims is very low. So your cost actually comes down dramatically.
So what you're saying is that if there is a medical emergency and your costs are say 40,000, 50,000, you won't get a reimbursement for that. Anything above 1 lakh is what you'll end up getting.
Yeah.
And then your premium is actually much lower.
Is much, much lower. So the way I'm saying is, instead of, suppose somebody wants to cover any possible eventuality. So instead of taking a 20-25 lakh rupee cover, what the person can do is take a 5 lakh rupee cover and then take a top up from 5 lakh to 20 lakhs. The top up from 5 lakh to 20 lakh will not cost him a huge amount. And the total cost of this 25 lakh policy will be much lower than the total cost of a single 25 lakh rupee policy. It may be from the same company. But it's just because the way top ups are structured, it's actually much cheaper. And somehow health insurance has not factored that in. So that's an opportunity for the consumer, because it's a aberration in the market. But that's how you would think about a plan. Now when you've decided what kind of cover you want, what critical illness, what top up you want, that is the time you get into, okay, which plan is right for me now?
Right. So what are the types of health insurance? Because you've got individual, you've got family, you have family floaters, you've got senior citizens, you've got so many different types. So how does one actually distinguish and say that, all right, this is the right plan for me?
Okay, so there are 3 basic types. There are a few others, but those are usually best avoided. So there is a single individual plan. There is a family floater plan. As the word says, the family floater is meant for a family, typically a nuclear family. The oldest member in the family plan should not be beyond 50. I think if you stay with below 50 and kids, it works very well. And we'll come to some of the pros and cons of it. And then the third is a senior citizen plan. Now these are plans for those individuals who would not get a standard plan. The reason they would not get a standard plan is because some disease has already hit in, or something has already happened, or they've reached an age beyond which it's very difficult for insurers to undertake those risks. So what insurers have created to cover that segment is senior citizen plans. Now those plans one should only opt for if you're not getting the standard plans without them. They usually do not require medicals. They usually have an element of copay with them. Copay means a part of the cost would be borne by the individual. So those are senior citizen plans. Now between an individual plan and a family floater,
Right. And how does one actually go about choosing that? Because
between an individual and a family floater,
Right.
So see, an individual is meant for an individual. If one takes a 5 lakh rupee individual cover, then I'm covered up to 5 lakh rupees of costs and up to all the room rent caps allowed by the 5 lakh rupee policy on my own. Suppose I take a 5 lakh rupee family floater, then the entire family, let's say it's a family of 4, has that cover of 5 lakhs. Any one individual can use that 5 lakhs. Now chances are that everybody will not have a serious illness in the family. And hence family floaters work out quite nicely because their cost compared to 4 individual plans of 5 lakhs is much lower. And it is very unlikely, as I said, that all 4 people or more than one person are going to have a very serious illness. However, even to cater to that, insurance companies have created certain products. These products are called recharge products. So if you have a family floater plan and one person has a serious illness, now while the possibility is low, there is still a possibility that the second person may also have a serious illness. So there are plans like recharge plans which have been created. Multiple companies have these recharge plans where you are allowed to claim if your entire claim is breached, your entire sum assured is breached, your sum assured is enhanced all over again. So if you have a 5 lakh rupee cover, you've had a disease which has used up the entire 5 lakh rupees, then you get another 5 lakh rupees of cover reinstated right there. So there are various types: reinstatement, recharge. One has to know the nuances of these a bit better. Some of them mean that a single claim must take the entire cost. Some of them mean you can have multiple claims that can take the entire cost. Some of them mean whenever you have a claim, your policy will be recharged. So there are different types, and one has to understand those, but these have been brought into the family floater to cater for those possibilities, those odd possibilities where two people have a very serious disease.
We are discussing health insurance with Yashish. Yashish, now you're talking about the advantages of family floaters as opposed to individual insurance. You know, quickly just wrap that part for us.
So as a rule of thumb, if the oldest member in the family is below 50 and has no particular disease which is going to keep happening again and again, in that case the entire family should ideally take a family floater plan, and in the family floater plan they should think about the recharge and reinstatement options. In addition to this, they should have critical illness plans, at least for the older members of the family. Now in case somebody is above 50, they should go in for an individual plan. Do not try to club into the same plan because it will increase the cost of the entire group, and specifically if there's one disease, the entire group will suffer. So put it into, and if anybody is suffering from a disease which is likely to recur, a recurring disease like diabetes or whatever, then separate them out and keep them in a separate plan. Do not have this. Of course, we are a family, so you know everybody has this longing that we should all have the same policy, but it will hurt you financially and it will hurt you. So basically the diseases that a 60-year-old is going to have or a 65-year-old is going to have is very different from what a 7-year-old will have.
So what you're saying is at some point of time, make it individual policies.
Absolutely. Keep it family floater up to about 50 years of age. At some point, move into an individual policy. I think it's very important.
So we talked about, you know, the important issue of critical illness policies. You know, walk us through those again. Why are they important? And also, how does one choose the right plan for critical illness and, you know, some of the companies that are now giving it?
Sure. So see, in critical illness, there are 5-6 major diseases. There are 35 out there, but, you know, the entire list is quite long. But there are 5-6 major diseases. If these diseases happen, your cost is going to shoot your normal healthcare policy because you're going to go to hospital and a few lakh rupees of cost will come in. So these will be heart related, brain related, various forms of cancer, nervous diseases, etc. So neurological diseases. So you need a critical illness cover. It is a must because, you know, those are the incidents when, you know, you'll suddenly face 10 lakh, 12 lakh rupees cost and the family will have a huge burden. There are multiple plans. Almost every general insurance company has a critical illness plan. These critical illness plans will usually cover multiple diseases. Some will claim they cover 20 diseases, 13 diseases, 15 diseases, but the bottom line is almost everybody will cover those 5-6 core diseases. Now some companies will come to you and say, I have a cancer product, I have a specific illness product. Unless you have a family history of that particular disease, I would advise you to take the overall critical illness rather than take individual cover. Because individual covers will typically come out to be a little more expensive. So whether it's a heart care or whether it's a cancer care, they will come out to be more expensive than the holistic cover. Now, in addition to, so that's what you would look at in a critical illness plan, and, you know, go with the company that you are comfortable with. All companies have the same plans, they have the same coverages pretty much.
Right. And what about health insurance options for the disabled? I mean, do they have options? Are they increasing?
So I think not just the disabled, but also somebody who's got an illness. I find so many people coming and saying, I'm not getting covered by any health insurance, and that is a truth. The reason is the person who's providing the health insurance is just another person just like you and me, maybe a company, maybe whatever, but they will only provide it if it is profitable for them to provide it. All right. Now that doesn't mean they want to be against anybody, but they are very, very wary of anti-selection. Anti-selection means people who need health cover are the only ones who take health cover. So if somebody is aware that they're going to get a particular disease, if they go and take health cover and the rest don't, then they will have very high losses. So that is not a situation that the companies can afford. So they will do medicals, and which is one of the reasons I ask people to take health cover as early as possible, because if a disease sets in, it becomes very difficult to get a health cover, and you may get a health cover that you don't wish to take. So the very senior citizen plans, etc. And depending on disability, so see, it totally depends on what kind of disability it is. But I have seen people who really want health cover and they don't get it at all because the disability.
So it's early days as far as the disabled
yes,
are concerned.
yes.
And of course, the other advice
Yes.
for those of us who are looking for insurance at buy the insurance now and don't wait till you're in your 60s or your late 50s.
Yeah, like I'm 42 now. I should have a health cover. If I don't have a health cover, by the time I'm 45, what if I get diabetes? What if something sets in? Then I can't get health cover any longer. So it's very simple. The companies will not cover me once I know that a disease has set in. I know there are definite costs. I can't pass them on to a company.
Well, another question that I have is a lot of people come and say, the healthcare costs keep going up. My insurance premium has suddenly jumped up. I was 39, it was a certain amount, 40. Why is that so? It's important for us to explain to our viewers.
So healthcare premium has not been jumping up too dramatically. Of course, it goes up with age, because with age, the possibility of somebody falling ill is higher. However, there are lots of options. So do not feel you are stuck with one health insurance plan. So if you bought and there's been a huge amount of innovation. I urge most people who've had a single health insurance plan for the last 10 years, 15 years, before the...
Now you've got portability as well.
So according to me, 80% of the great health insurance plans that one would like to talk about have come out in the last 5 years. So if you had a plan from 5 years before, it definitely makes sense to come into the market again and explore the market. Because a lot of innovation has happened. The new age companies have brought a lot of innovation, not just in product, but also in servicing. I hear now that 96% of claims are settled within 1 hour. So some of the confidence building measures that healthcare needed to take. So gone are the days when people say, hey, I don't get my claim. No, that is not the reality any longer. Now there's real-time claim settlement that's happening. So people do need to take advantage of that and explore the options all over again. Of course, when you're looking for a health plan, you would look at which hospitals are covered, what is the level of coverage, pre-existing disease, when do they cover. Now there are plans which are covering maternity 9 months from start. So you take a plan, in 9 months time, maternity is covered. That was unheard of. Even I wouldn't advise companies to kind of, have that kind of risk, but those are available now. So this is all part of innovation. And I think consumers should take advantage of it while it's available. And people have taken very rational decisions to make these plans available.
So, Yashish, let's discuss about top-up. There's top-up plans. We're hearing a lot about them. So tell us what they are and
Sure.
How do you choose from them?
So let me explain this just once more. Suppose you as a consumer, because you need to understand why the top-up is so cheap. Otherwise, you'll think it's some kind of a trick, right? A simple thing. Suppose you take a 1 lakh rupee cover. The possibility of 80% of your claims, 90% of your claims will come within that 1 lakh. So if you have 10 claims, 9 of them will be below 1 lakh rupees. Now, let's say you take a cover of 2 lakh rupees. Now, maybe all claims don't come in that. Maybe 90% of the remaining claims will come under the 2 lakh rupees. So only 9% of claims will be between 1 lakh to 2 lakh rupees. So ideally, the person who's providing the 1 lakh to 2 lakh rupee cover should ideally provide it at a much lower cost than the person who's providing the first 1 lakh rupee of cover. I hope that makes sense. So once you get to 3 lakh, 4 lakh rupees, 95, 99% of claims are sorted. Only that 1% will go above. So the frequency of claims really comes down, and hence the cost really shrinks. Now, most health plans have not considered this, and hence top-up plans become very helpful, because a top-up plan can help you increase your overall sum assured at a much lower cost. And it's no trick. It is just that the possibility of those claims is so low that it makes sense for companies to offer them at a much lower price. So you could get, for example, an individual who's about 30 years old could get a cover from 3 lakh rupees to 15 lakh rupees for maybe 3,000 rupees, which is really low cost, which is like 250 rupees a month. You could enhance your sum assured from 3 lakh rupees to 15 lakh rupees. So please take advantage of these top-up covers. They are available from multiple companies. So L&T Insurance has one, Religare has one, Apollo has one. So multiple companies. See, companies are going on innovating because companies want the business which is growing. And they want to do more and more, and they want to make the consumers happy. The 96% claim settlement within 1 hour is part of that. Take advantage of these companies that are providing these opportunities.
You touched upon super top-ups. What are super top-ups?
So top-up and super top-up. Top-up and super top-up are two different kinds of top-ups. A top-up means you can make one claim between the 3 lakh to 15 lakhs. The super top-up means you can make multiple claims between the 3 lakh. See, the chances of one claim itself is very low. The chances of an individual having multiple claims is extremely low. But these were excuses. See, the companies are trying to get away from the excuses that were in the market. There's an excuse. Oh, they will only cover one. What if you have two 15 lakh rupee claims in the same year? Right? So the company said, okay, we cover that also. That is called a super top-up. It's, maybe 5%, 10% more expensive. Because actually the chance of that happening is very low, but it covers that eventuality also. And eventually it is about covering into eventualities. So the company is just taking away the excuses one by one. And that's a super top-up is even,
So what would the takeaway be? That, health insurance is absolutely important for the individual and the family, but you really need to go into the intricacies of it. You need to look at the other products which are offered, critical illness, top-ups. One really needs to do it with a little bit of research.
Absolutely. And I think both the regulator and the insurance companies and players like us who kind of provide information have done a phenomenal job in the last 5 years to create lots of options and a lot of information for the consumers to utilize and make the best choices and decide what's right for them. And I think the consumer should definitely take advantage of that. It's the right time. Innovation will keep happening, but I think it's the right time, especially if you've had a plan, if you've got a corporate plan or something of that sort. Please don't use that as an excuse not to buy a self-insurance plan, because the corporate plan will get over when you retire, and that's the time when you will need it, and you will not get it because some disease would have set in, with a lot of people, and at that time no insurance companies are willing to cover it. So might as well take a cover well before, and especially for people beyond the 35, 40 years of age. I think it makes a lot of sense.
Thanks, Yashish, for discussing such an important topic with us. But in our second episode, we asked you a question about the maximum tax deduction that you can claim under Section 80C. The correct answer is 1,50,000. Congratulations, Sajal Mehra from Bangalore. You won a gift voucher worth ₹1,000. And it's now time for you to take our weekly quiz, answer this very simple question and win exciting rewards. The question is, what is health insurance premium? A, the amount health insurance companies charge each month. B, sum assured. C, a bonus that you get at the end of every year if you stay covered. Send in your answers to queries@policybazaar.com. And of course, thanks a lot, Yashish, once again. And you can also tweet us at Twitter at @policybazaar_in. You can email us at queries@policybazaar.com. And we'll see you next time with another episode of Policy Bazaar. Goodbye.